before I go and post the rest of this video, I just wanted to post the recap of this trade, how I'm going to be moving forward, and what I learned. So, instantly what I learned is that I always have this in my plan, but error, margin, like mistakes are a part of the plan. I never demand perfection, so if I don't demand perfection, there's always going to be imperfection. It's either perfection or imperfection, and we obviously can't demand perfection, so we're always going to have a degree of imperfection. And the imperfection in this trade was this model that I'm following. So I was trading this run on sell side as the delivery of sell side that I want to see before the market goes higher. But what I didn't realize was that the initial sell side is actually this low, because this is 730. We have to trade the highest high from the first print at 6 to 730. That's the initial buy side. The lowest low from 6 to 730 is initial sell side, and that initial sell side only gets formed right here. So I was a little rushed. My thought processes could have been a little bit more patient, a little bit more deliberate, and I would have been prevented from trading a long or a short, because the SMT on the internal highs would have invalidated me before I traded longs, and it doesn't reach buy side to frame a turtle soup to go lower. So that's the one thing that I get from this. And the second the second lesson that it's not really a lesson, it's more just a solidification of a lesson. So the bottom line is money management. I follow a simple plan that was given to me, so this has zero reflection on me or my ability to trade, and really it doesn't have any correlation to the model itself. It's just simply I made an error, and even if I didn't make this error and this was actually the initial sell side, I would take this again and again and again. But the bottom line is money management. I have a model that's given to me. It's simple. I follow it. It's unsubjective risk, unsubjective trade management. And this kind of solidifies the notion that the market's not your friend. The market owes nothing to you. The market's not. It has no emotion to you, so you shouldn't have an emotion towards it, unless you have emotions towards the mechanical process that you're following. Unless you have emotions towards seeing, okay, is this stop loss within my risk parameters? Can I fit my risk parameters within a stop loss? Alright, where's my first partial going to be? When am I going to run my stop loss to break even? What time should price deliver? Where does price just come from? Unless those things are exciting, there should be no emotion towards that, because every single bit of emotion that you have towards a trade or the market is removed the second that you accept that, one, you have no clue where price is going. As skilled and experienced as you can be, the tools that ICT's given us, and as good as you can use them sometimes, we really have no clue where the market's going. We just have best guesses, and we have the ability to manage how bad that's allowed to get if we're wrong, when we're wrong. So once you manage the risk, emotions are gone. Once you follow the plan, emotions are gone. Nothing should be changed, nothing should be even really felt. Of course, you're always going to feel something, but that's just what that is. So that's the takeaway from this trade. I think I'm going to move forwards well. I'm going to really focus on the simple top-down narrative approach. Making sure that I'm staying aligned with that. Following my process from the top down, continuing to wait for confirmation, continuing to manage my trade with logical take profits and a logical stop loss, and following a plan in money management. That's the bottom line. That's the only thing you need to know. Everything else you can stack on top of that, but until that is consistent, those two things are consistent, those are the bare minimum, and they're really all you need. But of course, patience, discipline, and general skill is good, which of course you can add on to those, but that's all you really need. So that's the end of this trade recap, and I'm done. So this is the quick analysis here. Trading into this daily buy side imbalance, sell side inefficiency. I initially wanted to look for longs until I stopped myself and realized that prices actually delivered to a premium at 10 a.m. as you can see delineated right here into previous day's high. This is a big pool of buy side liquidity into previous day's high and into 4-hour buy side inefficiency. It also trades into the low of this daily candle here. So now I'm expecting price to have sought out this premium, and it's gonna look to get down to these discounts. It might not be a long term. I'm still bullish on the higher time frame, so like on a monthly bias, on the monthly basis, I'm still looking for longs. Or not necessarily longs, but I'm more with an anticipation of price seeing higher. So it might not be a long-term sustained price run lower, but I can expect that price will at least get down to the consequent encroachment again and possibly below these lows, maybe into the lower half of this imbalance here. But price forms SMT, so if I was long biased right now, a problem would be, a thought that would be going through my mind is, well, if I'm long, this SMT is problematic because when price runs SMT like this, even if you anticipate that it's just a retracement, it's more likely to run deeper discounts if it has an SMT first, opposed to if it simply creates equal highs and then goes lower. It's more likely to do something like this. But if there's an SMT where it runs out buy stops before seeking a discount, SMT forming on that high, it's more likely to run a tiny bit deeper. So I'm more willing to expect that price will seek a discount here. I am trading the agent session model, so technically this doesn't even really need this doesn't really need a higher time frame analysis, but I just do it anyways, because what's like, why not? It takes like 5 seconds. I'm gonna find the first presentation. I might not end up using it, but the only way that you can ever use these things is if you just have them on your charts and be aware of them, and if they're sentient at the time of your execution, then you can possibly use them. But I'm not. Maybe that's a good place for a partial or anything like that, but again, you just have to have it on your chart. So it looks like there is forming SMT on these lows here already. I didn't realize that. Just jump back up really quick. So yeah, it's not the best thing to be trading in right now, to be honest. I mean, obviously it's pretty obvious statement, but we'll see. This is a point in time where you're just kind of waiting for price to leave this consolidation to do something. You can't. I mentioned in the video where I was forward testing that, not really forward testing, but I was looking to trade in the AM session, I think yesterday, and I was mentioning how within conditions like this, especially after large expansions, because after expansions we have to have a consolidation period in order to have enough liquidity to sustain another price run. But especially after expansions, we're going to have consolidations like these. You just have to wait until it tells you that it's over. You can't be in here trying to say, oh, S&P forming on this low, breaks an intermediate term high, I'm going to buy right here with a stop loss below this candle's low. Just, you have to wait, or be patient, or have it like super scalps, which is perfect for the Asian session model. But so I'm just going to try to find some kind of reference point here. This is just super chop. I just want some kind of reference point to see what price is more likely to do here. So actually, I'm gonna go to a daily chart really quick. This is an old daily low. Old daily low. Okay. So I noticed that MNQ is actually nowhere near these two daily lows, while ES is relatively close to these daily lows. So that could be a better reference point to use in order to kind of gauge where what am I trying to articulate here? To gauge a reference point for some kind of a reversal, because these are the levels that the algorithm is going to key off of. It wants to be able to buy below old daily lows, even if they're quote-unquote old. And it only really matters when I'm looking for a trade. I'm not just going to buy below every single low. There has to be that top-down framework, and then you bring specific kind of nitpicky, finicky kind of more subjective things like this and the first presentation for value gap into the mix. So it already kind of looks like yesterday, but of course we know price has zero correlation from one day to the next, aside from the fact that it's running on the same algorithm. Prior results have no, oh, I already have that marked out. I thought that was the old new day opening gap. Prior results have no correlation from one to the next. So we have 7:30. I'm going to go ahead and hurry up and get this new day opening gap marked out. We open up here. That's a nice big and juicy opening gap. We have initial buy side. Top right, that's fine. I'm sorry, what was that? Where's the new day opening gap on this? Is there no new day opening? That's right here. So for 459, the close of this candle to the open of this candle, we have this gap right here. I'm gonna take this off of the chart. This is just gonna be the daily BISI high. We'll look for support as we get up there. Okay, I need to hurry up. Actually, no I don't. I can slow down. So we have initial buy side relatively closer to the new day opening gap. And initial sell side. Now we run this initial sell side and we don't have any kind of SMTs forming, but that's okay. And right below this daily low, price has willingness to inverse this fair value gap. I bet you this looks like a breaker here. There's less volume, but this looks like a breaker and it displaces out of here. We kind of want to see speed kind of around now. I think I'm going to look for something here. So it was a long right here off of this soup. I could honestly have a really small stop loss. I'll leave it right here. Just targeting a quick 1 to 2. Quantity, I'm honestly just going to run 4. Buy 4 right there. This is relatively nice just because it's already kind of given me a nice little place to put a stop loss. I'm going to put it, price can hold it within right here, this fair value gap. And it might want to revisit this. It can revisit this sell side. And then we'll let it come down into this volume imbalance. But it shouldn't need to come any deeper than this, so. That's a nice little position, I believe, in my eyes. Running out sell stops. And we're going to run it back up to this initial buy side in this new day opening gap. I'll find the macro. That's kind of when I'd anticipate price to go ahead and deliver, because we've essentially already done everything that needs to happen in order for a price run to happen. I'm just going to move this over. Now I just need to monitor how price is. So most of this time has been spent in this upper area. It's definitely a little bit choppier than it was before in yesterday's Asian session volume, but I'm anticipating that this volume is probably most likely what it's going to end up being for Asian session, so I need to get used to this kind of sloppy volume. Not necessarily sloppy, but the regular volume that I can anticipate. On the 15 second, the next thing that I want to see price to do is not really that. Obviously you give it a little bit more time than just up into it and then, oh, it's going down, and then just immediately take it off. No. You give it a little bit of time, and if there's something meaningful off of that inability to get above this, then that's a little more concerning, but I'm not gonna hold anything too crazy. Now from this dealing range high to this dealing range low, we're going to observe the ability for price to manage to displace through equilibrium. And if it doesn't want to displace above equilibrium, then I would preferably take most off there. 15 second, you like to see that right there, getting through this balanced price range. Then if it comes back below this low, that's a good place for invalidation. So I'm gonna screenshot this. So this is, I need to find equilibrium of this range before I forget. We're just gonna clean up the charts a little bit here. Now, this balanced price range can see price. We want to see price support this little balanced price range. And then since my trade is pretty much at break even, I can go ahead and get another little buy right there, and then that should probably only bring my average out to around here, and then it's fine because I can still have my stop loss here and have very minute risk, and if it comes back below here, then I want to be out anyways. My stop loss is where it is. I'm just going to use the bathroom really quick. Alright, I am back. So again, because I'm at a point, this is like the best place for longs to add on another position if especially if you're in from the low risk buy, or as price is displacing out of this low risk buy area. The best place to add on another position is right in here. I like that, especially if it manages to get back into this premium end of this balanced price range and get up and out of there. That's very nice. So this is the 1 minute imbalance, if I'm correct, yeah. So we'll see how price supports that, but this is the best place to do that. So that's not optimal, but it still has a little bit of time to get up and out of there. Because like I was saying, if you have most of your positions on down here, then that means you have a really good average. So your average would be like right here. And then if you enter another one around here, then your stop is coming up into here anyways. So you can pretty much have a position on immediately at break-even risk. Preferably, if price doesn't, so price isn't beautiful as I'm wanting to see it print. I like that it's holding inside of this balanced price range, but it's not anything that I'm too excited about, so I'm more willing to take an earlier partial in lieu of anticipation that it might want to just mess around in here. I mean, that would make sense for the day before NFP, especially the session before NFP, or 2 sessions, Asian session, London session, New York, but I'm more willing to look for some kind of a partial, anything. So I'm going to go ahead and set one limit sell right here, because if it comes up and takes this buy side, my stop is coming into the low of this balanced price range after it leaves it, if it leaves it to the upside, and then if it goes takes that one, that'll be like, I don't know, it's better than completely break even. Then I'll move this. If it stops me out for most, then is it better to stop me out for most at break even, or is it better to take most partials here, move stop, and then let the runners go? I don't know, we'll see. I'm not perfect, I'll make mistakes. There could have been better decisions to be made. I would have preferred that it doesn't do what it's doing here. And it just comes down and wicks me out. Which is, in my opinion, that's fine. It might have been a stop run, but holding, let me take this off. I would have preferred that it holds inside of here. Yeah, it's a stop run. That it holds inside of here until the macro. So that's unfortunate. So I'm gonna try one more time, and then my stop loss is probably gonna be around the same area. So then I'm gonna set a limit. That's a really unfortunate place to put a stop loss, man. That's what you get for trailing your stop too tight. So I'm probably just gonna try to get something as it's coming down into this volume imbalance. I'll limit by 3 right here, and then stop losses right here. Since that was such a small loss, I'm fine with as such. I'll just take full. Right there. That's a really gross RR. I could have managed this a little bit better, but I don't think it's the management necessarily that's bugging me. I kind of wish I would have kind of just taken that first mistake and just, it's not even a mistake, right? I thought I was still comfortable. I still think I was comfortable with the stop loss. It's just where the bodies are telling you what's gonna actually happen here. But I mean, I'm just playing with change here. If it wants to come down and take out this low, then I'll just be fine. I'll just go out and wait until NFP and then be chilling. I don't even need to, like, it's really not necessary. So this macro is coming up, it's probably gonna spool. I mean, ordered flow is pretty obvious. I just need to take my hand off my mouse and let price do what price is gonna do. It's a lovely day to be a stop loss. So we actually need to observe this really quickly. So we did have displacement through equilibrium, so that's more likely. I think that this is good. If it doesn't move higher here, then I determine that that's improbable, because after displacing through equilibrium like that, we should leave this as a breakaway. But I'm not gonna. Maybe if this was a 1 minute in like the AM session, I would leave my stop right here inside of this breakaway gap, expecting that this leaves this order flow right here, all of this order flow in here. But since it likes to do that, I'll just leave my stop where it is. Again, it's change. That's the great thing about the Asian session. You don't really, or the Asian model, you you can have relatively small risk and like understand where price is is most likely to go, and if it doesn't go there, well, then it's really easy to just hop off, because it's not like you're really building a bias. You're seeing essentially which pool of initial sell side gets taken first, and then which pool of buy initial liquidity is closer to the new day opening gap. So inside of the macro, I expect price to spool higher. If it doesn't create a short-term low off of this, I will just close, because we just did what? We have these sell side sell stops that were taken by these sell stop, or by this short-term low, and then this low takes the low that took these lows and delivers to the consequent encroachment of this inefficiency here. So this should deliver higher. Once it moves away significantly, then I'll move my stop to this low. But if it, yeah. I'm tired. Look at this 1 minute fair value gap. I like to see that. If we come down to the lower half of this fair value gap, I can get stopped out here and be completely fine. Okay. Good Asian session. More than happy to walk away from that with a $70 loss. Because, who knows, the next Asian session, I'll see this exact thing roll around. Maybe I'll get in better around, I'll spend less time on the, what would you call it, on the higher time frame narrative, and I'll just sit in here and just be more diligent with getting this low risk buy right here, and then I'll probably have a better chance at getting a partial taken off. I would probably take a partial around here and then stop break even, and then this would be, no matter what, a winning trade. But I'm not here to talk about what ifs. I'm here to talk about the proper management of this trade that just occurred. I'm completely fine with that. You know, if it stops me out twice, you know, it is what it is. Anything else that I want to talk about? And that's just the probabilistic mindset that you have to cultivate as a trader. Is like, understand, I can lose that same trade like 3 or 4 times over, and then win one and still be up 1R. It really doesn't matter to me. Like, this was a fully managed, fully risk adverse trade, and it only ends up being $71. But in a similar trade like yesterday's, I'm running up like 2R, 3R, 4R, like 3.5R. But I didn't. Again, point of invalidation gets thrown right there, because I don't like how it's just messing around. Inside of this fair value gap, we should have seen low risk buy, first stage of distribution, second stage redistribution, get above this intermediate term high, find support here, and you know, we still might, but it's not having it. So I'm not really affected by anything. I know it might seem like I am just because I'm talking about it, but it really doesn't matter to me, because I understood what was going into this trade. I had a good invalidation level. I mean, that's very logical to have price trade into the consequent encroachment of this and shows like it's supporting price, right? I want to see it leave this premium end of this fair value gap and then go higher to get above these inefficiencies right here. So leaving my stop loss on this low is nice, especially since it already swept sell stops inside of this fair value gap and it didn't deliver after taking sell side inside of a fair value gap. That's not ideal, and is better than trying to hold on to a bias of a trade that might not even work out, right? You set your stop loss here where it makes sense to get out instead of holding your stop loss for all the way maybe down here, not moving it because you think, oh well, this is a market maker buy model, oh we're obviously going to go higher. Nothing's obvious, nothing's certain. See, would you have rather got stopped out here or be holding in this trade with the same risk that you had and getting ran on? You'd probably be down maybe like $150, $200. It's still a minute amount of risk, and it's not supposed to be like a super risk heavy model since it's the Asian session, but I'd rather get stopped out like that. Again, I probably would have had partial somewhere around here or around this high, and then rolled stop to break even and got stopped out in profit, but that's just how the cookie crumbled today. So, GG's, well played.